What is a BitBond? That is what we're going to be talking about today. We've recently been hearing this idea of BitBonds being floated around in the Bitcoin space. We've heard members of government talk about this idea, supporting it, saying that it is possibly a way to help us out with our national debt situation in the United States. So I thought it would be a great idea to dig into these BitBonds, talk about some of the potential pros and cons, and also talk about if this is something that is realistically actually going to happen. So that's what we're going to do. Before we do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave your boy a little tip. Now let's get into it. So what is a BitBond? A BitBond is basically a US Treasury that's packaged together with Bitcoin. The idea here is that since we haven't seen a lot of demand for US Treasuries, in particular US Treasury bonds, this long-term US debt, if we package this debt together with Bitcoin, the best monetary asset out there, it'll spice up the pot a little bit and make people more interested in US government debt, which is something that the US government needs, right? If people aren't buying US Treasury bonds and other US Treasuries, that is not good for the US. It's not good for the dollar. So it's basically an idea to spice up the pot and create more demand for US Treasuries. Where did this idea come from? As far as I've seen, it looks like this idea was proposed earlier this year in March, I believe, by the Bitcoin Policy Institute after we saw Trump establish the Strategic National Bitcoin Reserve, which basically established Bitcoin as a potential reserve asset. So with that establishment, we saw people start to float around this idea of incorporating Bitcoin into US Treasuries to help out with the debt. Now, do I think that BitBonds can solve the US national debt problem? No way. I've stated that the US national debt is way too far gone many times on this channel. I think our interest expense is way too high and it's continuing to grow. We're seeing our deficits continue to grow, and I don't think we're ever going to get out of those deficits. So the national debt will continue to grow. This probably cannot solve the US national debt problem, but it may be able to help, right? If it can help the US acquire a little bit of Bitcoin, then that Bitcoin may go up in value and it can help the US pay off a portion of their debt. But with the way it's growing, I don't think it's really going to make a difference. Let's talk about some of the potential benefits of BitBonds. For the US government, I see two main benefits. The first one is that it can lower the government's interest expense on their debt. Because you're pairing together US Treasuries with Bitcoin, the superior monetary asset, that will spice up the pot and potentially lead to more demand for this debt instrument. And with more demand, that means the interest rate may come down. I was reading over the Bitcoin Policy Institute's proposal, and they proposed that with the implementation of a BitBond, it could lower the 10-year bond interest rate from the current level of 4.5% to around 1%. Let's go ahead and take a look at a chart of the US 10-year, and this shows the yield here, and as you can see, over the past 5 years, the yield has continued to rise, which means we aren't seeing demand for the US 10-year like the government wants, and we're really not seeing a lot of demand for any US debt, especially this long-term US debt. So with the inclusion of Bitcoin into this debt instrument, it may lead to more demand and lower the interest payments. And with a ton of debt that needs to be refinanced over the next couple of years here, the US government wants to refinance that debt at a lower interest rate. According to the Bitcoin Policy Institute, now this statement was made in March, so it may be a little bit of a different number now, but according to them, $9.3 trillion worth of US debt needs to be refinanced over the next year. And according to Matthew Siegel of Van Eck, $14 trillion needs to be refinanced over the next 3 years. So the US government would like to refinance that debt at a lower interest rate, and the implementation of BitBonds may allow them to do that. The second benefit is that it could help the US build out their Bitcoin reserve. We saw back in February or March that Donald Trump established this strategic national Bitcoin reserve. However, he said that for the US to acquire more Bitcoin, they have to acquire it in a budget neutral way, which means that they can't use people's tax dollars to buy more Bitcoin. So with these BitBonds, a portion of the bond would be used to buy Bitcoin. Now, a portion of that Bitcoin that is bought would go to the bond investor, and a portion would go to the US government. So this would technically be a budget neutral way for the US to acquire more Bitcoin. Now, I would say that the people are still being taxed just in an indirect way as you're spending more money through this debt, right? And that's leading to more inflation, which means that people are seeing their savings, their dollar savings depreciate. So really, it's just kind of like a different way to tax people, but it would technically be a way for the US to acquire more Bitcoin. For the bond investor, the main benefit is that you're getting exposure to Bitcoin and that potential upside. However, my main issue with this whole BitBonds concept is that as an investor, wouldn't you rather just buy Bitcoin straight up? To me, this idea of a BitBond is you're taking this dying investment in a US Treasury, an investment that I kind of think is garbage. We are just continuing to see this supply increase, and to me, it's very clear that US debt is going in the wrong direction. I don't even want to touch it as an investor, and you're pairing it with this great investment in Bitcoin that's continuing to appreciate. Wouldn't you rather just invest in Bitcoin straight up and get all that potential upside? And I think that people are going to realize this if we do see this BitBond established. After a while, people are just going to think, well, why am I even investing in a US Treasury at all when I can invest in this Bitcoin and get all this upside, right? Why do I want the garbage if I can just have the good part? And the thing about these BitBonds, from what I saw on X, is this is how they would work. So basically the BitBond, 90% of it would be used for traditional government expenditures, and 10% would be used to purchase Bitcoin. And for the bond investor would get paid these interest payments on the BitBond. At the maturity, they would get paid their full principal. And then when it comes to the Bitcoin portion, they would get up to 4.5% of the appreciation on an annualized compounded return. And after that, they would split the additional return 50-50 with the government, and the government would keep their 50% for the strategic Bitcoin reserve. But we know that Bitcoin's compound annual growth rate is much higher than 4.5%. It's a lot higher, and why wouldn't you just buy Bitcoin straight up and get all of those returns rather than splitting your returns with the government above 4.5% annualized compounded return? So to me, this feels like a bad deal for the bond investor. However, for people who are maybe not as comfortable with Bitcoin, who don't understand it, this could be a way for them to dip their toe into it. Maybe if they've been in the treasuries market for a long time, this could be a good option for them. But I think eventually people will just realize that US Treasuries are a bad investment and Bitcoin is a superior investment. Now, will these BitBonds actually happen? I'm not sure, but I would lean towards saying no. For one, because of what I just mentioned. I think it would just highlight how superior Bitcoin is compared to US Treasuries. And after a short period of time, people would start to think, why am I even invested in this BitBond at all when I can just buy Bitcoin straight up and get all the upside? Now, the US government may need to take dire measures to save the US Treasuries market, right? If they aren't seeing demand for US Treasuries, then this may be worth a shot. I also think that the US is going to need to acquire Bitcoin. And as we saw back earlier this year, they're going to have to do it in a budget neutral way, at least for now, and this could be a good option to do that. So for that reason, maybe we could see it happen. It would also be difficult to get passed by the House and Senate. It would require a whole new framework for US Treasuries. It would require the custody of this Bitcoin and management of it. And if the government ever lost the Bitcoin, it's not like the US dollar where you can just print more, right? If you lose it, it's gone forever. So I think there are definitely some hurdles between now and this BitBond idea actually happening and BitBonds being implemented, but I do think it's an interesting proposal. If BitBonds were to be implemented, I think it would be super bullish for Bitcoin. We could see other governments around the world doing the same thing, or maybe we could see the state level government and city level government in the United States looking to implement BitBonds as well. And that's just going to lead to more Bitcoin demand. So I think just the discussion in general is bullish, and we have a ton of other bullish catalysts out there. We will see if it happens. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Really appreciate your support. Thanks for watching. I'll be back soon.